Let's calculate the present value of uneven cash flows, which consist of an annuity and a final payment, using the financial calculator. I'm using a Texas Instruments BA IIPlus. Let's look at the question. The question asks us to calculate the present value of a set of cash flows which consists of an ordinary annuity where we have $100 being paid every year for 4 years, and at the end of year 4 we also receive $1,000. Given an interest rate of 5% per annum, we're required to calculate the present value of this set of cash flows. If I was to plot the set of cash flows, would then be represented as the ordinary annuity, which is paying me $100 every year for 4 years, and at the end of year 4 I'm also receiving $1,000. I'm also required to calculate the present value of this set of cash flows. So here I know that N equal to 4, I by Y equal to 5. I have a PMT of $100, an FV of $8,000. I'm required to calculate the PV. This set of cash flows can be thought of as a bond which pays a 5% coupon rate and therefore paying $100 every year for 4 years, and at the end of year 4 the principal amount of the bond, $1,000, is also being repaid to you. Therefore, what is the price of the bond, or the present value of the bond today? So let's go ahead and use the financial calculator to find out the present value. So before we start putting in our values, we need to ensure that any past data has been removed. So I go second, FV, second, clear. Then I have my values. Since N equal to 4, I have 4 and N, setting number of years or number of time periods is equal to 4. I by Y is 5, so 5 and I by Y. You might recall that the financial calculator does not expect a 5% or a 0.05, just a 5 will suffice. $100 in the form of PMT and $1,000 as FV. And finally, to compute the present value, which gives me a present value of 1,177.3. This tells me that the present value of this set of cash flows, where I receive annual payments or an annuity for 4 years at the end of every year, $100, and at the end of year 4, $8,000 at an interest rate of 5% per annum is equal to 1,177.30. Or if I were to invest 1,177.3 today, purchase a bond, I would then receive these set of cash flows, which include an ordinary annuity where I receive $100 every year for the next 4 years, and at the end of year 4 receive $1,000.